4, 3, 2, 1. Welcome back, listeners and our new viewers to the Trailblazer 2.0 podcast. My name is Dave McDonald with Mobiletier.
jroliver, Agile Wealth Partners.
And we're so grateful for everyone to join us this week.
We're super excited.
Super excited. I'm so glad we're going to get back at this, John. I really am.
It's kind of nice to get that groove going.
So hopefully you caught our last little mini video that we've completely changed the format a little bit and really catering it to you, our viewers and listeners. So I'm not going to give much of an intro in this one. We're going to jump right into it and really give you an impactful episode. So with that, I'm going to kick it off to John because we're talking about wealth, baby.
Talking about wealth in your business. And so just one of the things I just wanted to chat about this week was the idea that to consider the idea that when most of us are solopreneurs or you're a small business owner, whatever your kind of business connection is. So whether you're an executive partner, you're a solopreneur, or you're a small business owner, you're an entrepreneur, I mean, you're usually putting 95% of your time into this one business, one asset. And if it fails, would you consider yourself diversified? So, I mean, have you thought about that, Dave? And I mean, what's your thoughts on that?
I've always viewed my business as that asset. But you know what? When we were prepping for this, John, and I was reading some of the stuff that you were putting into our outline here, I had a question. I had to step back for a second because, in all honesty, I think even some of our listeners, and by all means, comment and correct us if we're wrong, but I think they just look at it as this is my business, this is my passion, this is something that I've created. It's replacing my previous career, and yeah, it's supporting my family. It's supporting the lifestyle I want to live. Hopefully, in some cases, maybe you're still getting there in the startup and growth phase. We'll get to those in other episodes, but I don't think a lot of business owners look at it like an asset, right? They look at it as it's an in and now income generator. It's not my retirement. It's not that 10-year forward thinking plan.
Yeah, exactly. So, I mean, I would challenge everyone to just kind of look at it and say, like, this is my portfolio, and draw a big circle and put my business in there.
Yeah.
And it probably fills up most of your portfolio. And that's usually one of the biggest problems that we see when we talk to business owners is that the other little circles in there, or the other assets, are usually very small because for a good reason. Going to point 2, with great risk comes great reward.
Oh yeah.
If I can put a lot of time and energy into my business, I could probably make more than if I were to just put, if I made $10,000 this month and I put it into one stock, I could probably take that $10,000, feed my family, and put it back into the business and make more money than if I were to just take that $10,000 and just say maybe I just bought an actual stock on the public stock market.
Yeah.
It might take 10 years for that to double, whereas I could probably double that whatever's left over of that $10,000 a lot quicker. So with great risk comes great reward. I mean, that's why we do this. So
exactly. When you were talking about that great risk, great reward category, I couldn't help but also think of it as part of wealth, and maybe it's just me, but hopefully you have some clients that think the same thing. It's not only my personal wealth, right? It's the wealth for our families. It's that leaving that legacy. Mm-hmm. And as an entrepreneur myself, that's where I look at my company, right? And with Mobiletier is, I've got 3 young boys. So ideally, it'd be great for this to be something that they can take over and build wealth for their family. Mm-hmm. But if I am fortunate enough to at some point sell the business and exit out, I want to make sure that wealth can again be passed down to my kids so that they can become entrepreneurs if that's what they want to do or whatever. And I think, sometimes as business owners, we think of it as, okay, we've got a lot of risk in this. The reward is that I broke away the shackles of corporate America and I'm running my own person. Mm-hmm. But they forget that the rest of that reward is at some point, I want to retire. And I know of no business owner that goes, you know what, I got into this to be 85 and still killing myself 60 hours a week. No one knows. I don't.
Yeah, exactly. So how do we make this work? If it's really our only asset, I mean, how do we make this work, and what are the ways that we do make this work? How do we accomplish the fact that, again, if I told you had a stock portfolio, and you just had one company in it, you'd probably laugh at me and say, you're just an idiot.
That's not
what we do then, So some of the things we do to make this possible are we get loans so that we can leverage and scale.
Yep.
Which to me is just it's leverage. So again, going back to the stock portfolio, you could also get leverage on your stock portfolio. The same thing we do with our business. We get loans, we hire more people, we get more product, and we sell more product so that we can grow bigger, right? We also get partnerships. So partnerships maybe in your stock portfolio might be some sort of advisor team that you might work with. In our business, it's just partnerships. I'm going to make a partnership with Dave over here. He does landscaping, I do roofs. Let's work together. Let's figure out how we can make this work. Whereas again, maybe in the stock portfolio is a little different. That's where maybe you hire people to help you
manage those assets for sure.
Hedges, hedging is the same thing. So how do we hedge our business so that it doesn't just crumble if something happens in the economy, right?
Yeah. And I think that's the big thing, especially as we're all now coming out of the pandemic, is, did you leverage your business to be able to withstand this? Did you have the protocols in place, the business practices going involved? And if you didn't, hopefully you've made those changes that it can withstand the next one, because let's just be honest, this might have been the worst pandemic in 100 years, but it's not the first time we've seen an economic slowdown in the last 15 years.
Correct.
And so it's those things, and again, that goes back to the wealth, right? Are we hedging our business for that? But John, I wanted to ask you a question as we were doing this, and this kind of relates to, for all of our listeners that have been following us for the last year and a half, John has said this a few times, and I think it's really fitting here too as well, is no different as your stock portfolio, or maybe when you were in corporate America, but as a business owner, it's as revenue is made, bills are paid, and you have your payroll, are you taking some of that and throwing it into a retirement program?
So that's
no different than your corporate 401k, right? You have to be able to pay yourself first as the owner.
Which often doesn't happen.
I agree. So, I'm right here. But making sure that you are dripping some of that, as John so eloquently has put it a few times now, dripping some of that and letting it sit somewhere for your future.
So, and we're getting into what does this actually mean to me? Why does it matter? And this is one way you can diversify your assets is to do just that, is to make sure not all your eggs are in just your business basket. And it's hard for people to understand this. They think that they need to reinvest in the business, and I 100% wholeheartedly agree with that. I think that should be your top investment. But you should be dripping dollars down into, as Dave says, maybe a retirement plan, or if anything, starting with, again, a liquidity fund, and then secondarily, maybe a taxable account, and hopefully a retirement plan. And what you can do with that, what it does for you is it actually diversifies your assets. And now, if you do own something that's different than what your business is, And one of the things I wanted to get into though is, why it matters to you and what we can do is understand everything has what I call a driver. So when we're talking about a diversified portfolio, it sounds kind of boring. So look at it this way, look at it as a driver. Like what drives my business? What drives this? I wanted to take, $10,000 this year and put it in a retirement plan. And I bought some stocks with it or bonds or real estate. What drives that bonds or stock or real estate? Because if I happen to have a restaurant, but my number one stock is Starbucks or Chipotle Mexican Grill, did I diversify myself?
No,
probably not.
You actually hurt yourself because you're investing in your competitors.
Yeah, exactly.
But I think you bring up a good point though. It's knowing where that's going, what is driving your decisions to be that wealth, and how to diversify your business. And I think having those nest eggs and those other things, because I know business owners, and especially over this last time, John, they had those wealth strategies, right? And this is why it should matter. If you look around your community, you're going to see businesses, and as sad as it is for your community that those businesses no longer exist because of the pandemic, there is a percentage of those businesses, now it varies upon community to community and business to business, but there were some of those businesses that they did have their business as a wealth driver. They did have it as their retirement. And so they went ahead and said, you know what? I'm out. I've done my thing. The pandemic has slaughtered my business, but you know what? I built this thing over 20 years. I put away my wealth. I built this thing as an asset.
Right.
I can now walk away and support my lifestyle and my family. And that's why this matters.
They had a choice, right?
They had a choice.
Choices. Yeah, they had choices.
That's why this matters. And that's why we're talking about these strategies now, is it's giving you the choices.
Because knowing that there's systematic risk in the economy, there's economic cycles, there's pandemics, things that we can't. These things are going to come about, and we need to make sure that all of our assets are not affected by it. So if you did have some basically cash in the bank and the pandemic hit, because you were diversified into other assets, now you can take that cash and utilize it to make sure that your business doesn't go under. Exactly. Or in your example, you had so many other assets that were not drivers just of your business only that allowed this person to say, you know what, I'm actually retiring. You know? So, and it wasn't really easy to sell your business during that time.
But a lot of them didn't sell, they just didn't return.
Correct. So from my point of view and a recommendation of something to think about is that when you have these other assets that you want to add to your portfolio, and I would put this on paper personally, is everything, all the way from all of your liabilities, of course, and all of your assets, and put down what you think the value of your company is, and that's another thing that most people aren't doing. Again, if you hold a stock in your portfolio, the market gives you a price, and it's very easy and understandable to think about. Most business owners, they just kind of, again, you could draw that circle and it says my business, and they don't have a value by it. I'd say use some of the free tools / use your industry knowledge to create a pretty good understanding of what the value of your business is. And if you want to take it another level, use an advisor to help you get to that next level, or even greater if you need to, because if you're doing something like a buyout or something, use a actual professional valuation, usually an accountant that will do something like that. But have a value there. I think the rest of your assets, this is something that's a little bit odd, and I think this would be very helpful for people. I would say if you own a business, and a cycle, the economic cycle could affect your business, well, don't you think it's going to affect your stocks too?
Oh yeah, I mean, it affects all of it, but I think, to your point, it's, having those drivers and knowing the economic flows, and I think you hit the nail on the head, right? You cannot have an asset if you have no idea what that asset's worth. And, you can have the best risk analysis, you can have, putting money in, putting money aside, but if you don't know what your business is worth, it's not really a great asset, right? I mean, you wouldn't think the same thing when it came to your home, right? Like, well, it's a house. Yeah, but it plays to your assets. It's what's used to get you going. It's what's used for other stuff. Your business is no different. So go out and get those evaluations. So John, I think, as we close here, I think you were kind of hitting on one head. And this is kind of where we want to take these next episodes as we go forward here, is not only giving you actionable things to think about and why does this matter to you, but we want to make sure that we are here as a resource, right? And so this is John's bread and butter, right? This is where he thrives, is helping and coming alongside our listeners, our viewers, and of course, you business owners. So like John had mentioned, as you go through your risk analysis and as you go through and put that business as an asset, put that in that circle, put a value in it. Reach out to people like John or others. We know we have a lot of listeners across the globe. We thank you for that, by the way. So reach out to someone in your area. But again, we are available as a resource. We want to help you out. If we can be of any service, smash that follow button on YouTube. Hit us up on social media and Facebook. Comment below. Message us. We will gladly reach back out and provide you with services to help you give that wealth step to your business.
Exactly. Yeah, we can be very resourceful, and we're obviously here to help.
So with that, we thank you so much again for joining us. Hope you like the new format. By all means, comment below. Let us know that you like that. With that, I'm Dave McDonald with Mobile Tier.
John Oliver, Agile Wealth Partners.
And we'll check you next time on the Trailblazer Podcast.
Take care, guys.